And now to our first conversation. Well, Nigeria's inflation rate came in red hot yesterday. That's for September, rising for 8th consecutive month, hitting a fresh 17-year high. Let's drill down now numbers with Dumebi Oluwole, analyst, financial derivatives company, join us right here in the studio. Dumebi, it's been a long time.
Yes,
Great to have you back.
Thank you. Thank you.
So looking at this, 20.77% is in line with expectations?
Yeah. The market did expect inflation to continue to increase, but the expectation was that it would increase, but at a slower pace. And that's because we're headed towards the harvest season, although there are lots of things now, coming in place that are, raising eyebrows about how the harvest season is going to look like. And the number one issue right now is flooding.
Right.
So the flooding is hitting like the major food producing states for Nigeria. For example, the Lokoja flooding it washed away like I think about 100 hectares of rice farmland, and it also affected Olam as well, where they had to incur a high economic cost of almost like $15 million of farmland lost. So the flooding is having an impact there, and the National Emergency Agency, they did say that 13 states are going to be affected, and all of these 13 states, they bought the around River Niger and River Benue, and as you know, Cameroon as well is going to release their dam. They're going to continue doing that. This flooding is not ending anytime soon, and that's going to continue to affect harvest season. Farmers are beginning to opt for premature harvest, and we don't yet know how that's going to look like, but from all indications, the harvest is not going to be as bountiful. The flooding is a major threat to the harvest season, which is in Q4, and we likely would see inflation edge higher because of this impact. And right now, demand for food items and various commodities are still very high, and we're headed towards, we're already in the Ember month, we're headed towards the festive season, and most likely, when demand increases and supply is still this thin, and supply is even going to probably get thinner, we're going to see food inflation jump beyond the 23% that it already is, and headline inflation will also continue to increase. But apart from the food inflation aspect of it, there's also the fact that inflation right now in Nigeria is not only driven by, cost-inducing pressures, and supply-inducing pressures, but there's the major impact right now is also coming from forex. So the fact that the naira continues to lose value and depreciate, naira fell to a low of 746 naira per dollar at the parallel market, and with that happening consistently, we're definitely going to see the impact of the exchange rate pass-through effect to commodity prices, on that regard. And we're also seeing that as election spending is increasing, with the fact that campaigns have already started, and there's also an increase in ways and means advances from the CBN to the federal government, we're seeing an uptick in money supply. That as well is going to, continue to mount pressure on Nigeria's inflation rate.
With all of this, it doesn't seem like it's going to peak, at any point. It seems we're even going to tick higher with all of these.
It's still going to increase, although the month-on-month inflation did, decline, indicating that inflation is probably headed towards a tipping point and, could begin to fall. But like I said, with the flooding impact, this was in September. Flooding is happening right now in October, and it's probably going to continue till November. So with the flooding impact, we're definitely going to see that, outweigh, the harvest season, because with harvest, we expect that there would be an increase in food supply, and that will taper prices. But now that the flooding has happened and it's affecting major producing states of the country, it's affecting Benue, it's affecting Bayelsa, it's affecting Adamawa, Nasarawa, Delta. These states are responsible for commodities like rice, gari, tomato, pepper, onions, the main things that people consume, even livestock produce as well. And these commodities are affected largely. So, and these are things that people consume on a daily basis. Even commodities like millets that people have, are moving into.
Right.
It's also affected. So, and demand is going to increase.
An environmental war.
Exactly. That's what it looks like right now. So, apart from all the other food security threats that had already been in place, like Boko Haram, herdsmen clash, banditry, all affecting farmers from going to their land to plant and also harvest. Apart from all those other structural factors, now this flooding is happening, and as the Lagdo Dam release continues, it's going to get worse. And, there's also the impact of climate change.
Right.
Right from time, NIMET had already come out to say that, precipitation levels of the River Benue and River Niger were going to definitely rise because of climate change impact. And that combined with the Lagdo Dam release is, worsening compounding the issue. Yeah.
All right. We did get that 150 basis point hike at the last MPC meeting.
Yes.
It's still ticking up.
Yeah.
The CBN governor said as long as it keeps going up, talking about the inflation rate, they will keep hiking.
Yeah,
so maybe another 150 basis points on the card, maybe for the next meeting.
I mean, we're not really looking at that right now. And the reason is because interest rates are already increasing. Even though it has taken some time for the other interest rates to rise, that's the Treasury bill rate. But the truth is that right now, like, they're already increasing. So there might be the CBN might want to withdraw or might want to hold on increasing interest rates again. But I mean, they are being aggressive. So it's more of like a 50-50 chance that the CBN would actually increase interest rates, continue its aggressive approach towards taming inflationary pressures. But at the same time, because interest rates are already increasing, meaning that the hike in interest rates is beginning to take effect in other markets, and investors will start pulling out funds, towards, so meaning that as interest rates are increasing, liquidity is being mopped up already within the system. And that's because people would start, investors would start putting their money with fixed income instruments, and that as well would, that would definitely mop up liquidity within the system, and then begin to reduce inflationary pressures. And remember that I said that money supply is also one of the reasons why inflation is also increasing. So from that angle, inflation rates could, we could see inflation rate begin to reduce, but not as much, because because now food inflation, which is a major dictator towards the direction of headline inflation that accounts for over 50% of Nigeria's inflation basket, is having a major hit right now because of the flooding. So that completely outweighs the impact of the money supply mopping. But like I said, it's a 50-50 chance. The CBN might decide to continue its aggressive stance towards taming inflation rate, because inflation looks like it's going to continue to increase, and even increase at a faster pace now because of the flooding impact. But interest rates are also increasing, so they might want to, even if they're going to increase, maybe not as much as 150 basis points, because investors now are looking at putting their money in other fixed income instruments that are already increasing. I mean, the Treasury bill 364 days tenure is already as high as 13%, coming from about 6%. So investors, it's attractive right now to investors. There's an incentive now to buy Treasury bills and mop up liquidity. But the other downside to it is what is happening with the NGX. We're seeing that because there's an inverse relationship between an increase in interest rates and stock prices, we're seeing the stock markets definitely take a hit, and that's why I'm saying that the CBN might not want to be this aggressive with increasing.
You think they'll care about the markets at this point?
I mean, they might want to. They might want to, because investors, even though investors right now like to have a balanced portfolio. You don't only want to put your money in Treasury bills, and especially with the fact that they're saying that Treasury bill rates in Nigeria are not exactly as steady. They might be 13% today, and it begins to reduce. And they want to balance their portfolio to have some of equity, some of Treasury bills. But like I said, it's a 50-50 chance. And even if the CBN will increase interest rates, it might not be as aggressive as 150 basis points.
And I'm talking about the NGX, seeing it's definitely on a downtrend. At this point. I'm wondering, where's the best place to make money in these markets?
I mean, like I said, the truth is, it's just best to have a balanced portfolio, because real estate is not looking to attract.
Cash
and apart from that, apart from even having the balanced portfolio, we're having a balanced portfolio right now is for people that actually have the money to invest.
Sitting on the sideline.
Interest rates increase right now is not an incentive to the common man who is just looking for money to get by on a daily basis. So interest rates are increasing, yes, but is that an incentive for me to put my money in the bank and have just maybe a 1% increase in interest on savings rates? Do I really want that, or rather I'll have cash? So normally
it's better than cash, though.
To be honest, the layman wouldn't want that, because right now they want to consume. They need money to consume. There's there's an increase in cost of living, and everybody wants to be able to get by on a daily basis.
Right.
So if you're earning 200,000 and you have to account for your rent that has already been increased. You have to account for transportation that is already increased. You have to account for fuel that is already increased. You have to account for food that is increasing on a daily basis. Where is the money for investment or keeping in the bank to accumulate?
Right.
People rather having that 1% increase or having that 1% interest, they would rather, want to have the cash, to spend. And remember that with the fact that interest rates are increasing, we're supposed to see an increase in marginal propensity to save rather than consume. But right now, we're not really seeing that because majority are falling below the poverty line. People are just looking for money to just get by on a daily basis. So instead, what we're seeing is maybe not an increase in consumption, because the real value of your income is not as high as what it used to be before because of inflation. So people are just living, just getting by on a daily basis. Consumption is still exactly what it is, but savings rate is not increasing.
All right. I'm sure investors just hoping for a bottom somewhere.
Yes,
we'll keep watching.
Yes.
But what's happening with wheat prices? I saw it's eased.
Yes. So, and that's because of, and that's happening despite the Black Sea optimism that's currently going on. At some point in July, Russia and Ukraine, there was this agreement for the Black Sea operations to continue. And the Black Sea is where grains are moved, are transported to the global market from Ukraine and Russia, but particularly Ukraine. So there was some agreement for that operation to continue so that Ukraine could, sell off its grains and actually make some money. And that happened in July. The reopening of the Black Sea happened in July. And although there are still backlogs of ships with grains, tons of grains that have not yet, made their way to the global market, and that's why we're still seeing some of these grain prices, remain volatile. But regardless of that, Ukraine has been able to sell at least 6.8 million tons worth of wheat and other grains to the global market for them to generate some revenue. But right now, with the fact that Russia has intensified, its missiles to Ukraine, so there's some negative sentiments towards that area, and it's like the backlog right now is increasing. At the moment, there are over 35, trapped vessels with grains, that are supposed to have made their way to the global market. So wheat prices, not only wheat actually, other grains like corn, barley as well, yes, and sorghum as well, other grains that Ukraine sells to the global market are currently trapped. So they're just the negative sentiments or mixed market sentiments, let me put it that way, mixed market sentiments is what is making wheat prices, very volatile right now.
And it'd be great to see those prices actually come down.
Yes, and that would be good for that would be good for Nigeria. If wheat prices soften, it will be good for Nigeria because Nigeria is a net importer of wheat.
Exactly. All right, Jumebi Oluwole, thank you so much. Always great to have your perspective, and congratulations on your baby.
Thank you so much. Thank you.
All right, now, so we're talking commodities there. After the break, we'll be looking at Nigeria's debt level and options to help us manage it. That's our next conversation. Do stay with us. This is Business Morning.